The IRS just set the new tax brackets for 2026. Here's the fast version, plus the one thing almost everyone gets wrong about how brackets actually work. Let's break it down. Start with the basics. There are 7 tax rates and they didn't change. 10, 12, 22, 24, 32, 35, and 37%. What changed for 2026 is the income where each one kicks in. The IRS nudged every bracket up for inflation. Here's the 2026 map for a single filer. 10% up to $12,400, 12% to about $50,400, 22% to $105,700, then 24, 32, 35, and the top 37% rate kicks in above $640,000. Married filing jointly, the brackets are roughly double, 10% up to $24,800, 12% to about $100,800, 22% to $211,400, and the top 37% rate starts above $768,700. But before any of that applies, the standard deduction comes off the top. For 2026, that's $16,100 if you're single, and $32,200 married. You're not taxed from $1, only on what's left, your taxable income. And that's the number that matters. This is Form 1040, page 2, line 15, your taxable income. That's the figure the brackets actually run through after your standard deduction. Not your salary, not your gross. This line. Now, the thing almost everyone gets wrong, being in the 22% bracket does not mean you pay 22% on all your income. The rates are marginal. Each chunk of income is taxed at its own bracket's rate. Only the dollars inside the 22% band get taxed at 22%. Here's what that really looks like. Take a single filer with $60,000 of taxable income. The first $12,400 is taxed at 10%, the next chunk at 12%, and only the last sliver at 22%. Added up, and the tax is about $7,900. An effective rate near 13%, even though they're, quote, in the 22% bracket. That's also why a raise can't drop your take-home pay. Moving into a higher bracket only taxes the new dollars at the higher rate, never the income you already had. More income always means more money in your pocket. One quick note on who makes this. The tax breakdown is prepared by a tax accountant with over 15 years of public accounting experience, so every figure is checked against the IRS sources. Always educational, never advice for your specific situation. So the 60-second takeaway, 7 rates, higher thresholds for 2026. The standard deduction comes off first, and your bracket is not your real tax rate. Your effective rate is lower. This is general education, not tax advice, so check with a pro. Subscribe to the Tax Breakdown for tax rules in plain English.